Hi, and welcome to episode 3 of Traders Playbook. I'm Azita, part of the marketing team at Deriv. With me is Priyanka, also from marketing, and Prakash, Bhudia, head of product and growth at Deriv. Today, we're looking at how crypto trading has changed and what that means for traders like you.
We'll use Number Go Up by Zeke Faux to guide the conversation. It's a powerful book that looks inside the crypto boom and bust of 2021 and 2022. From NFTs to scams to the fall of FTX, it shows just how fast things went off the rails.
But this isn't just about the past. We want to ask, what can traders learn from that time? And what does smart crypto trading look like now? Prakash, let me ask you first. What was happening during that boom that made people ignore all the warning signs?
It was all about price movement. From 2020 to 2021, Bitcoin went from around $7,000 to over $60,000. People saw those numbers and forgot to ask questions. Even institutional traders got pulled in. Grayscale's Bitcoin Trust attracted over $30 billion in assets during the peak.
That's what Fox brings up in Chapter 2, saying he wouldn't call the concept of prices going up forever, for no reason, a technology. Well, he's right that people got swept up in the hype, but he overlooks the real tech distributed ownership and borderless exchange that drove crypto's value beyond just price.
So let's dig into that. Was Fox right to be cynical, or did he just misunderstand the space?
Fox exposed scams like pig butchering brilliantly, but dismissed real infrastructure. For example, by 2022, stablecoins were moving billions in cross-border payments each day, and Ethereum's $11 trillion in 2021 transactions outpaced Visa. That's not hype. It's utility.
Exactly. Fox shines when he's exposing scams, but sometimes he groups everything together. He treats meme coins the same as core protocols. That's like judging the stock market based on penny stocks.
There was this other author who didn't agree with his opinions, Michael Lewis, right?
Right. Fox basically accused Lewis of getting seduced by the Sam Bankman-Fried myth. And that's fair. Lewis framed SBF as this misunderstood genius when the facts said otherwise.
Lewis lost objectivity, but Faux lost nuance. One painted SBF as misunderstood. The other painted the whole industry as rotten. Both missed the mark. Bitcoin's been on fire. Since May 2020, it's climbed more than 10 times and frequently crosses the 100,000 USD mark. ETFs and companies like MicroStrategy have driven institutional demand. It's seen as a hedge, though it's still volatile.
And what about the rest of the market?
That's the shift. In May 2021, Bitcoin made up 40% of the total crypto market. Ethereum had 19%. Today, Bitcoin dominates with 63%, while Ethereum has dropped to 9%. Bitcoin is winning. Crypto in general, not so much.
Which makes sense. Institutions are buying Bitcoin as a macro asset, not because it's cool or part of Web3. It's the most stable thing in a very unstable space.
So are traders smarter now?
You bet, and the numbers prove it. In 2021, nearly 80% of retail traders admitted to buying based on social media. Now 65% focus on technicals and macro trends. Derivatives trading, a sign of more strategic behavior, has grown from 35% to 60% of total volume.
What should traders focus on today?
Volume, volatility, risk, not hype, not hashtags. Ask yourself, can I trade this responsibly?
For traders using Deriv, what tools make sense in this new market?
Start with risk control. Multipliers let you trade on price movement with a capped loss. Your stake is the maximum you can lose. CFDs give you higher leverage, which means greater potential profits, but also more risk.
And don't forget the right mindset. Don't come in trying to chase the next 10 times. The tools are there, but if you use them like it's still 2021, you're going to get wrecked.
Yes, that's a great point. What keeps you grounded in a market that's still so volatile?
Journaling trades, setting limits, checking sentiment before entering. Most importantly, are only trading what I understand.
Number Go Up is full of people who traded based on hype. Don't wire money to someone named Crypto King 420. Don't buy something because it looked cool on Instagram.
Next time on Traders Playbook, we're talking about losing.
And why being a better loser might be the key to long-term trading success.
We'll be looking at Best Loser Wins by Tom Hugard. a book that challenges everything you think you know about mindset.
It's not about confidence. It's about control, about thinking differently than the crowd.
If you've ever spiraled after one bad trade, episode 4 is for you. So crypto didn't vanish, it changed, and traders need to change with it.
Forget hype, focus on structure, and use tools that support your plan, not your emotions.
And whatever you do, don't treat price action like a personality contest.
What's one thing you believed in 2021 that you don't believe now? Drop it in the comments.
And send this to the friend who still thinks Shiba Inu is a retirement plan.
See you next time.